Hello traders, Day Trader Matt here with businesswithtrading.com, doing an E-mini trading room recap for the 3rd of December, Wednesday, and today was another good day in the markets. It's always good to have the first days of the month be really well, so it's definitely pretty exciting, especially in the December month. Let's get into what we did on the day. We actually took 4 trades for 9.5 points. And our first couple trades were real quick. We took a short up here at 7/4, turned it into a long down here at 6/4, and then we decided to get out very early, and the market kept going higher. So it was actually interesting. It came down, we got long, we ended up taking profit as it wasn't really looking that great. It turned over, we did get long again, and we were able to take profits a little bit higher, and then eventually the market did keep grinding higher for a little bit longer until it started just going sideways. So that's what it is. It was a pretty decent day today, and we missed the bulk of this move, and we missed the rest of this move. And, obviously we missed the move down as well. Pretty much because we weren't really trying for everything. All of our trades got filled today. But it goes along with the theme that we've been discussing for a long time, is that you don't really have to be in every single trade to be successful. I've gotten some questions lately on my strategy and how I like to do things. And the best way I can actually explain my strategy, and it's definitely simple. I don't use extra indicators. I'm not using all of these indicators that people try to sell you or promote, because you really don't need them to trade. The brain can only, the conscious mind, what you're aware of, can only process about 7 plus or minus 2 bits of information, pieces of information at any one time. So I always look at that as 6 or 7, because it's plus or minus 2. And because of that, the more things we look at, the more confused we get. And the more confused our brains get, the worse we're going to trade. That's how it is. The more things that we confuse ourselves with, the worse we're going to actually trade. And that's why my system, I think it's unique. It's definitely something that I haven't really seen anywhere. I've seen people take pieces here and there and try to pass it off as a system when it's really not. It's just one little method that should be used in the grand scheme of things. I've seen stuff like that. But as far as my system altogether, I haven't really seen anything similar. I am a big price action guy. I don't know if I talk about that often, but that's what I am. I'm a price action guy, and using price action means you use price. You don't use any of the other bullshit out there, like stochastics and MACDs and moving averages. I've seen people say I'm a price action trader, and they're using so much junk on the screen, you can't even see the price. It's like, you obviously don't know the definitions of that. And that's one thing I wanted to talk about a little bit, talk about my strategy. I don't like to risk a lot of money, so I risk, less than 2 points, or less than $200, because we trade a 2 contract max in the room. I'm going to put all this in some trading tips and throw it on YouTube eventually, but I just haven't gotten around to doing that yet. Like to spend my time, working with other traders and then doing a few other things too. Right now we're overseeing a website redesign, and it's not really going very smooth, which is to be expected. So, it is what it is. But anyway, getting back to the market, we look at things. Yesterday we were talking about how to look at trend And in doing that, you can set your probabilities, in your favor. You can say, well, the market's doing this, so taking this trade, I have a much higher probability than if A, B, and C did not occur. If only A occurred and B and C didn't, it wouldn't be as likely. So that's pretty much my strategy. I look at the market, look at the context of what's going on. I try to, wait for a good setup, and then when it happens, we try to make it count. It's like when you're hunting. My dad was a hunter, so kind of like hobby-ish, I guess you could say. And he would sit in the woods for 6 hours and might not shoot anything. He might sit in the woods for 30 minutes and shoot something. But he belonged to a hunt club, so anyone who shot a deer, they split it among everybody. So everybody would get something. And it was pretty cool, and it built a camaraderie, and he got a few friends out of it. So it's pretty cool. But trading's the same exact way. Instead of sitting in the woods with deer pee all over us, we're sitting in our office looking at a computer screen, and we're waiting for a setup. It might take an hour, it might take 2 hours. There might not be a setup. That's happened before. It's very seldom that happens. It's very, very rare. It's not as rare as seeing a black spotted rhino, because those don't exist. So it's not that rare, but it's a little bit more rare than, getting struck by lightning twice on the way home from buying a lottery ticket. So, it's somewhere in between that. But anyway, I wanted to talk about that a little bit. Hopefully it explained a little bit. I've been getting some questions asked to that, and I wanted to talk about it a little bit. So hopefully that makes some sense to you. It's always better to risk the least amount possible. Whenever you're in a trade, you want to risk the least amount that you can, and then when it goes in your favor, you don't want to give that back. But there are certain scenarios in trading, and I teach people how to read the markets. When the trade goes in your favor, is it likely to come all the way back down below where your entry was? Or is it likely to not do that and keep going in your favor? Those are things you really have to look at when you're doing your risk management. And I don't hear many people at all talking about that. Because it is very, very important. Because what if the trade goes in your favor, you take a little bit of profit, then it comes back down, it stops you out, goes below your entry, and then it just takes off in the original favor that it was before? Or what if it stops you out and completely reverses? Or what if it just comes down, stops you out to the tick, and keeps going? There's different market environments, and that's one thing that I really do look at. And, I find it very interesting. There are many different market environments, and they're going to all move differently. And they're going to create different trades. I refer to them as, aggressive trades and conservative trades. And that's what it is. So hopefully that explained a little bit. You got something out of what I was talking about. Today was a very good day, so everyone in the room, definitely congratulations. We've had an awesome December so far. We just carried over the momentum we've had from November. So thanks everyone for watching the video. Have an awesome, awesome, awesome night. And for those on the email list, I have a special bonus underneath the video.